the planes. Hey, there's Mario Draghi. Yeah, he's got a big decision to make. Kenny's like, I don't like your profile picture. Yeah, well, that's Mario. That's Super Mario. Cool. So, nothing going on today except the interest rate decision out of the ECB in 10 minutes. We just got the Challenger report. Janet Yellen testifying. ISM services. The actual ECB press conference. But besides that, basically, dead day. So good morning. Angela wants to know where I get my news. Angels speak to me. So let's get going. Bum 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 Forex.Today. Good morning, everybody. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on long term, never risk money you cannot afford to lose. All right, so I propose we watch Euro. We're about 8 minutes away from the interest rate decision. The ECB is widely expected to cut interest rates, which is really strange, isn't it? I mean, we're getting to the point where you cut it more, does it really have any impact? But I guess you got to do something, right? So cutting it more, I don't know. It seems like it's a symbolic gesture, doesn't it? Like, well, you know, I was going to make a big investment, but I don't know, I was going to wait for interest rates to fall further. I mean, it's weird, right? So what else could Super Mario do today besides cut interest rates? What other monetary tools could he adjust? QE. In what way? Oh, Kenny says RRR, extremely unlikely. So I actually posted it on the website this morning. So I'm giving you the answer already. Okay, the levels and duration of quantitative easing. How much quantitative easing per month, but also how many months? And that does impact things. Would you like to watch the press conference live in real time? Yeah, yeah. Here's a VIP ticket. I think what I'll do is we'll watch the beginning of it, and then I'll stop the recording and upload the video to YouTube, and we can just stay in the room and catch it in here. Is that cool? Right? Do you want to watch it together as a community live and in real time? Cool. High five. Up high, down low. Yeah, cool. Smells like a plan. Cool. Well, thank you for being on my team. And if you're on the website and you don't know how to get to the page, it's right on the home page. Now that is a pretty picture. What do you think? Isn't that pretty? We're 5.5 minutes away from, is that right? 5.5? Yeah, 5.5 minutes away from the interest rate decision. Okay? But that's not the big news. Can you imagine? That's not even big news today. The big news is at 8:30. Right now it's 7:40. So just not quite an hour away. The press conference begins, and that's where he would announce changes to the quantitative easing policy. More quantitative easing, longer duration of quantitative easing, euro goes south. But yeah, we'll wait and see what happens. I'm a little nervous that we've overshot, that the dollar's overvalued, like everything's played out, and anyone getting into the trades now are way too late and they're vulnerable. Do you remember we had a big drop in the Euro USD this year, and then there was something like a 700 pip retracement? You guys remember that? Because people thought the Fed was going to raise interest rates much earlier in the year, and they were wrong. So if you're just getting into the trade now, I mean, you're slow as molasses on a cold Georgia morning, right? So that leaves you vulnerable, that the people that are already in wouldn't mind taking some profit. A couple other psychological reasons why that might happen is that if you're a professional fund manager and you have, you know, a ton of profit on the euro short trade, that we're coming into the year end, maybe you catch a spike and you're done for the year. You take your profit and then you, right? And then you report all your profits on your annual report to all your investors, and you take a nice early holiday and you give yourself a huge bonus and so on and so forth, right? Take a couple weeks off and relax. Fly out to some Caribbean island, lobster, champagne, right? Then fly back home, shop for a new Ferrari for Christmas. Life is good. I don't know, do you have one with more carbon fiber and stainless steel? Yeah, that's the one I'm looking for. So, you know, so that's on my mind, where this trade might have already taken place, and people just trying to get short Euro USD now may be in a world of hurt because that trade has already happened. But we'll see. If Mario goes crazy and does some major quantitative easing, that should weaken the euro again, just on itself, new information. Where the Fed raising interest rates in December, that's played out. We already know that, right? Actually, Mark, I was thinking about one of the new GTs with the little mini back seats, four-seaters, basically a Porsche Ferrari. I saw a few of them at Ferrari World in Abu Dhabi, and they were pretty nice. I like them because they're not too flashy. They're basically Porsche Panamera Ferraris, right? Yeah, that's the one I'm talking about, yeah. Saw about 5 of them at Ferrari World. Okay, here we go, TradeTheNews.com.
A few moments, anywhere from 30 seconds to a few minutes historically. Again, the main refi rate expected to be held steady at 0.05%. We'll focus on the deposit rate. Analysts are looking for anywhere from a 10 to 20 basis point cut further into negative territory. The consensus is for a 10 basis point cut. That will take it to negative 0.30. And lastly, the marginal lending rate expected to be held steady. Just 30 seconds away, and the euro just hovering around the 106 handle in volatile trade, fractionally lower. Again, the key support on the downside would be 104.70, the March low, should there be a dovish decision.
This is TradeTheNews.com. Thank you, TradeTheNews.com.
Should see the ECB rate decision anytime now. I'm still waiting for the ECB decision.
Bad time for a coffee break.
ECB cutting the deposit rate. We're waiting for the amount. They do cut the deposit rate. They cut it by 10 basis points as expected. So cutting the deposit by 10 basis points as suspected. Still waiting for the other rates. Main refi unchanged as expected. So keeping the main refi unchanged as keeping the marginal lending rate unchanged. So in line across the board there. But again, another cut of the deposit rate further into negative territory. It's in line with expectations. The euro 106.90 getting paid here. So a short covering continues for the euro initially. We'll see the press conference in about 45 minutes time. And again, consensus across the board there.
ECB in the statement
ECB just known that the further measure will be announced later today. So further measures coming. And again,
hey, watch the euro come back down.
The press conference, euro off the spike highs, 106.30 getting given there. So approach 107 now, 60 or so pips off its best levels there post rate decision. As Draghi indicates, they'll make another announcement during the press conference on more measures.
Coolio. All right, so the euro gets strong, not necessarily, just short covering, because no surprises out of the ECB, right? So they're like, okay, it's not going to crash farther because there's no, it's all priced in. You understand? Well, Chris, I was just explaining, like, if you're thinking about getting short now, you're about like 2 years late. Okay. So, anyways. Everyone's sitting on all this profit. We're wondering if the ECB is going to do anything drastic and do something, to add new negativity. But everything that had already happened, like we already expected all of this, so it's already priced in. Nothing unexpected happened, so it's a good time to take profit, right? So the green candles are not people buying euro, it's people getting out of those short for profit. Now, guess what? Then, 30 seconds later, it's apparent that he says, in the statement, he says, at the press conference, he's going to make a new announcement. What do you think that's going to be? Tweaking of the QE. Yeah, Bubba. Maybe more, maybe longer. That, you would think, would bring the euro back down. Okay, so here's euro crosses. We can go over to euro USD if you want. Okay. Oh yeah, I wanted to follow up on the scalp yesterday. You guys remember we scalped ADP? Okay, I got to actually drop this back into the minute. I want to show you this. It worked out like many different ways. Okay, let me zoom in. That's 5 minute. Okay. Exodus. All right, hang on. Where is this? Where is it? It's in here somewhere. All right, good. All right. Oh, I shouldn't have done that. All right, here we are yesterday. Remember, for the first few seconds right before the news, we had a giant green candle, went up to this is a weekly pivot point, and then immediately dropped. It bottomed out 2 minutes later, so I drew a fib. Wait, but we drew it here. Hang on, let me adjust it. We drew it here, came back to the 382 for a short, right? Down, but what was the target? 382 predicts what? What does a 382 Fibonacci retracement predict for an extension? 1618. So it comes down and hits this little green line, which is a weekly pivot point. So it drops 25 pips pretty quickly, hits obvious support, hesitates. So on a 1 minute chart, that could be your 1 minute scalp. It's not the full extension, but it's a 1 minute. So when the 1 minute move is dead, what do? You change the time frame. For the guys that are trading the 5 and the 15, they're also waiting for the retracement, except they're not watching this little hesitation. To them, it's just a hesitation on a candle. What they're going to measure is this as a low, and they change the chart to a 5-minute chart, and oh snap, there's their retracement, and it fell. 50% predicts, right? 1382, which it comes down and hit the 1382 and stopped. Now the interesting thing is if we redraw the fib off the 1 minute scalp, which is the 1382, it predicts the 1618, which is this area, which is pretty good for a lousy, stinking, no good 1 minute chart. That predicted that bottom. And the 5 minute scalp, this swing, predicts basically the same thing. And that's called fractal geometry. Isn't that beautiful? Whether you're the 1 minute or the 5 minute, even if you traded the 15, it ends up being the same thing. It dropped, it pulled back for an hour into the 50% retracement, and then fell. And then look, it actually went down to the 382 and the 1618. So depending whether you're conservative or aggressive. Okay? Boom, boom. Isn't that cool? Whatever time frame you were on, it worked. The 1 minute, the 5 minute, or the 15 minute. Lovely. Okay, the Swiss National Bank declines to comment on the negative ECB deposit rate. ECB cut their deposit rate negative. How are you going to cut your Who's got the lowest interest rates? Who's got, I guess it's highest negative interest rates, right? ECB, yeah, so the SNB now has a inferiority complex, which is a wonderful European way of putting it. I still love the unemployment numbers. The negative, which is a positive. It's so hard for me to grasp that, but I just don't think in negative terms. It's funny. But yeah, the Swiss have an inferiority complex. Okay, so there's that. Kicking off. By the way, look at these levels that the euro is monkeying around in. Let me do it this way. Weekly bottom, weekly top, right? Now, the wick, almost weekly M4, almost basically, weekly M1, which are the extremes. But inside weeks, right, are support to resistant weeks. S1, R1, and that's really, look at the real body on these candles. It's just creating an inside week, which means, like let's put this in English. Okay? If you're a bull, you buy it low off the reversal pivots. If you sell it high off the reversal pivots. You know what I'm talking about? Right? Cool. So pick your poison, right? All right, so let's move on to .com because the ECB press conference is the next big thing. So that's big, right? But then Janet Yellen is testifying. Well, that's big. But then ISM services at 10. Like, that's big. And what about the stock market open? Well, that's big. And tomorrow, non-farm payrolls, Canadian jobs report, OPEC's meeting, potentially, and the rumor is, wink, wink, nudge, nudge, OPEC, including Saudi Arabia, are going to cut production and jack up oil prices again because they're desperate. Cool, huh? Like, what a boring week. We might be printing the bottom for oil. Your last chance, guys. Boop, boop. You should have a barrel in your backyard like, yeah, I bought this puppy for 40 bucks. Really, Grandpa? That's amazing. Sure enough. Can I touch it, Grandpa? No! Keep your filthy fingers off my barrel of crude oil. Are you eyeballing my WTI? So anyways, could be very interesting. Okay, so that's that. Let me go back to what we should be doing as economists. Tomorrow, the big event is non-farm payrolls. Have you guys begun your model? Are you modeling the number? What are some of the inputs that are available for your model today? Remember, I wrote that giant report on how to predict non-farm payrolls numbers? Okay, Challenger report did come out, so we'll cover that now. And then what else? Chris, it's $500, but because of Black Friday week or it's Cyber Thursday, I guess. You can pick it up for only $300, but you have to act now. Okay, Chris. I also accept Cuban cigars. I like rum. I like bourbon. All right. You drive a hard bargain. I'll give it to you for free. How about that? It's at fxstreet.com. And there is a cost, though. Okay? There is a cost. You have to click like. Oh, you already got it? So let me put it to you this way. Thank you, Mark. I appreciate that. Put it this way, I spent several hours writing that while my children played in the backyard and I ignored them. So I'm either dedicated to you or I'm a creepy dad or both, but there was a cost. It cost me something. So if you would you click the little like in the top left-hand corner and just say, I appreciate it. Don't do it for me, do it for the children. But that's true. I mean, it actually cost me something, right? Hang on, it's still loading. Let's bring it up here. But anyways, parts of the model here. One of the things that's discussed in this page, still loading, it must be my internet. I haven't rebooted this PC in a month. I guess once a month you should reboot your PC, right? Oh, maybe everyone's clicking it. Well, thank you guys. I appreciate it. FX Street apparently appreciates that. All right, so 3 people think the report is lame. Okay, so that's it. So a couple of things that go in here. So like I tell you, like average NFP number, average weekly jobless claims, blah, 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 blah. So yesterday we got the ADP. You can put that in your model. Today we just got the Challenger report. Let's take a look at that. Challenger report, 31,000. Last month it was 50,000. Okay. What does that mean? 30,000 people were laid off. It's not people losing their jobs. Like if you get fired from your job, it's not going to be in the Challenger report. But if a company lays off 250 people all at once, that's different than just being fired, right? It's a mass layoff. The number isn't really 250. I think it's anything, it's only, I forget, it's like over 50 people or 20, 25 even laid off all at once, but it's a layoff. It's not just people, it's someone getting fired and losing their job, right? Or quitting or something. So we can get that, and I believe actually I put it in the article, even though 3 people thought the article was lame. You can actually click it, and it pulls it up. Oh, and then, oh, they changed the link. Interesting. So I was actually, in the report, I actually linked you to the Challenger, Gray, and Christmas website. So they changed it. All right, so anyways, you can get it. It's done by Challenger, Gray, and Christmas, if you want to Google that. X's and O's. So we got that. So now you got ADP, check, check. You got Challenger, check, check. What else goes into your model? What I tell you is look at the ISM data, specifically for the services, ISM services, because that's the large majority of our economy in the United States. I say pay close attention to the employment subcomponent. Oh, now that is a nice tip. Whoever didn't like it, lame. That's a nice tip. So what you actually need to do today at 10 o'clock, ISM services numbers come out, and everyone will talk about the headline number, and you say, I don't really care about the headline number, and then you look into the subcomponents of what created that number, and you go specifically to the line item about employment. The employment subcomponent to the ISM services data report. That's cool, right? That's some smart money right there. So off we go. So if this is short covering, what you should see is the dollar weaken across the board. Right? Because it would be people essentially getting out of the dollar. They're not necessarily buying euro. I mean, they are, right? Because they were short euro, now they're buying the euro back to cover. But anyways, this could change on the news about quantitative easing. So, like, if you are a bear, guys, get ready in this pivot profit zone. Okay, this would be a logical place, even for just programming an algorithm. You could say, all right, if we find ourselves at the weekly R2, sell it, because the probability is it's going to hold, especially if you're going to be in this position for a couple of weeks. You're not so worried about a 50 pip pullback against you, because this is also a reversal zone in here, right? This gray zone. So you could say first, my AO, area of opportunity. Your first AO is going to be this weekly pivot profit zone. Next one's going to be a little higher up off of sort of this area, and then the next one's off this area. So if you're going to get short today or tomorrow, it's probably one of these areas, and you probably already have that programmed in your algorithm. If you're a hedge fund, right? So you're just like, you're not even watching the charts. Who cares? If it comes up there, it's overbought, sell it. Done. Next. Like yesterday, do you remember we had ADP come out? The thing spiked up, right? In here, remember? Just in here. It spiked up. It just went straight up and then straight down. Well, it went right to that weekly pivot point and then within 10 seconds, within 5 seconds, within 1 second, Euro USD dropped for the next 12 hours. It went straight up. What happened? What would have to occur to change the direction of the Euro USD? Well, first of all, there would have to be sell orders already there. It's not like thousands of traders were just waiting for a giant spike in green candle and then click the button manually sell. That would be psychologically almost impossible, right? Because you'd be afraid, wouldn't you? You're like, oh my God, look at that giant green candle. I could totally lose money here. No, there were orders already there that said, all right, if price goes up to the weekly central pivot point, sell it. They made that decision long ago. They're not in front of their charts. And the other thing is, how much money does it take to dramatically reverse the Euro USD? $1,000? $10,000? 100 million? A billion? 10 billion? I mean, there was a lot of orders there. There was like $10 billion sitting there, placed by a computer. That's not yet, Imad. That's in 25 minutes, 24 minutes. Yeah, billions and billions and billions. So anyways, those same people might say, well, if it comes back to the weekly R2, maybe sell that. Oh, I see, Imad. Okay. Yeah, maybe. So pick your lines, guys. Pick your lines. I would try to stay conservative, however, because when you trade against fundamentals, you tend to lose a lot of money. Okay, so don't think of this technically. I'm just saying technical analysis would create this, oh, and look, it fell exactly when it touched it. But my point here is that is a technical place. There's no doubt about it. But you need to be careful in these situations, and this is sort of the bigger message, even if this short does make money. You have to ask yourself, is this a technical move or is this a fundamental move? Did the world buy this because it was the weekly support pivot, or did they buy it because it was the weekly M1? Or was this a fundamental change where the ECB cannot cut interest rates further? And what they're doing now is basically symbolic. It's not really going to change anything, right? And if that's the end, then it's all been priced in. And if it's all been priced in, there's no further weakness, and therefore time to at least take your profit, right? And what that can do is move this up. And then it hits stop losses, and then it hits more stop losses, and then it freaks other people out, and they get out, more stop losses. And this thing can be like a tsunami. Okay? And not only is it dangerous to try to swim against the tsunami, but you should probably stay out of the water altogether. Okay? And this could just be a giant tidal wave. So we'll see how it acts off that weekly pivot. It doesn't have to go down here, but that, if I were me, that's where I would do it, right? And, well, look, so far it looks fairly lucky. Sure, Ben, but that's why I'm not short anymore, right? Right? I think I got out at like 105.50. You know, which is what, within 50 pips of the actual bottom. So, not bad. Oh, sure, we can do that. You guys want to watch the order flow? It's a good idea. Thank you for asking. So let me go into my toolbox so we can see the order flow. Do you ever wonder why you sell the bid and buy the ask? It's because it's from the point of view of the dealer, of what used to be the market maker. So there used to be a time when your brokers were actually market makers, and they would take the other side of your trade for you, right? So the bid, which means buying, but you sell the bid, right? So like, why do you sell the bid if bid is buying? Well, because it's from the point of view of the market maker. They're buying it at this price, so that's what you would sell it to them for. Okay? And therefore, and then this is the ask. They're asking 106.87, would you like to buy that? And you're like, yeah, I'll like to buy that. I'll buy the ask and sell the. So to me, it's reverse, right? Because if I'm buying it, I'm the one bidding, but it's not from my point of view. It's from the other side of the trade, and it comes again from market makers, which generally don't exist for retail traders anymore. So Saudi Arabia, I think it was their oil minister earlier today said that they're not going to cut production, and the Iraqi oil minister just said, just in the last minute or two, said that we plan to maintain oil production plans. So they're jawboning ahead of the meeting. Wouldn't it just make you mad though if tomorrow they do cut production? And then you find out these guys are basically lying. They're like, well, what's the point? Yeah, Mark, that's true. And you know what's encouraging is it seems that he's doing a pretty good job, compared to, other ECB presidents and stuff. So, it's true that in the past, even with Mario Draghi, they waited and waited and waited and waited and waited and waited and waited like almost ridiculously too long. But it seems that they are improving. I'll have to give them some credit. They're moving a little faster. I mean, they could still be doing nothing, right? So that's cool. But let's be honest here, though. Europe's problems is not a monetary policy issue anymore. Okay, Draghi's cut interest rates, deposit rates are negative, and they're doing quantitative easing. We're about to learn that they're going to do more quantitative easing, but it's not going to fix it. I mean, he's done everything they could possibly have done. And he was the one that came in and really kicked some butt in Greece and got some action out of Greece, right? Stupid politicians didn't do anything. So what's left is it's a government problem. We need reforms in all the different European governments. And it's just not going to happen, is it? I mean, we're 100 years away from that. So, you know what? I hope the ECB has a big enough impact that Europe comes back. I really do, because the rest of the world needs it. The rest of the world's waiting for Europe. But I don't think it's an ECB problem. Right? So I just hope that the ECB is powerful enough that Europe doesn't have a lost decade like Japan. Really lost 2 decades, right? So anyways, what do you think about my discussion here on the hedge fund algorithms? Were there orders there? Right at my giant arrow? Yep, cool. Yeah, Mark, and Europe is changing dramatically. I remember a couple of years ago, I was reading a report that the French eat 30% less baguettes than they used to. They just talked about blah, 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 blah. I said to my wife, I'm like, well, you know what? It's not a bread issue. It's not that the taste of French people has changed. It's that what it means to be French has changed. Right? It's not skinny little men with berets walking around saying, oui, 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 baguette, baguette, baguette. Please pass the fromage. All of a sudden, you might be North African of descent or culturally based, but you're 100% French. But, you eat couscous. You don't like baguettes. And so what it means to be French has changed, which is, I think, very, very interesting. Yeah, and as Mark says, yeah, that could be a long, endless conversation that does need cigars and alcohol. But, the world's changing, guys. The world's changing. So anyway, so I think we can say somebody had an order there. Either bears getting back in or scalpers that longed it. Right? Now, if you got out of this sort of like long term, like you're done for the year, this wouldn't come down, right? But there's some others that are going to trade it as a trade. So they bought it, okay, fine. And what it does is knit some stops and all kinds of stuff and scares people out. So you catch that move. And then maybe even the same guys, they're going to short it off the top. And the only thing that happened is, they bought it at support and sold it at resistance. Yeah, Luis says, yeah, you should feel proud of being a part of a develop. Yeah, and everyone's got their problems, right? Like Mexico and the crime that needs to be fixed. Mexico is a beautiful place. Mexican people are fabulous people. The culture is wonderful. Got to get rid of that crime. And then you look at like Brazil was a diamond in the commodity boom, and people were saying, oh well, Brazil's problems are over. What? Yeah, Brazil's got all this money now. All the problems have gone away. What? The only thing that changed in Brazil is that they actually had some money for a while. But now that the money went away, we find out all the same problems are still there. Brazil's in a world of hurt. Yeah. Yeah, I enjoyed Brazil. It's nice. I even flew down to the south. It's a big, beautiful country. But just because suddenly it had money. Was Brazil suddenly wealthy because it was doing things right? Because it had made complicated, difficult changes in their system, their government? Did they get rid of bribery? Did they get rid of corruption? Did they get rid of crime? Did they fix any of the problems? Like any of them? Is that right, Philippe? Yeah, I'm not saying anything, I guess, bad. I'm just saying it's just nothing changed. So whatever Brazil does for itself, fine. Brazil is Brazil, right? It's a beautiful place. But nothing changed is all I'm saying, right? So there was a time when Brazil was broke and had problems. Then there was a time when Brazil was rich. They didn't fix any of the problems, and then now they're broke again. And there we are. So now everyone's sitting around saying, well, next time we're filthy, stinking rich, we'll make the big changes. Well, that's not going to happen, right? I'll give you an example for America. And by the way, I'm just waiting for the ECB conference. It starts in 10 minutes, so we're just watching price action stuff. But let me give you an example of America. There was a time when in America, the bigger the truck you had, the cooler you were. Big was awesome. You get big, like, even though you just drove around town and you just drove a cushy little, white collar job, you'd want to drive a Ford F-150, but then your buddy would buy an F-250, and you're like, well, F you, I'm going to get my Ford 350, and then I'm going to get mine's going to be a dually. Oh yeah, mine's going to have like a 1,000 horsepower diesel engine, and then you're like, oh yeah, well, I'm going to get a Hummer. Yeah, get a Hummer. Because I'm going to make your Cadillac Escalade look like a sissy, mommy minivan, right? You're going to look like a soccer mom when I get my Hummer. And that's what it was like. And then guess what? Oil prices went up. Well, yeah. Guess what? There's some demand for fuel, right? So what happened? Oil prices went to $4 a gallon. So what happened to these vehicles? What happened to the sales of these vehicles? Hummers and Escalades and so on and so forth. Right? Your Ford Super Duties. What happened to the sales, guys? In America. Now we're talking about America's problem. Yeah, those cars basically became worthless. Like, not just went down. You couldn't give them away. Seriously, you couldn't give them away. No one wanted to buy them. Nobody wanted to buy them. Okay? So it wasn't that they were saturated, just nobody wanted one. They're like, are you kidding? It's like $300 a week in gas. Right? There literally sales went to zero and you couldn't get rid of it. Okay? And then what? Oil prices came down again from $4 to $2. And you know what? Sales went straight back up. We just went back to doing what we've always done. And very quickly. Just like, not a problem. Boom. Just right back to the same problem. And I'm not talking about the move that just happened in the last 6 months. This was like several years ago. But it was just like it never happened before. Boom, truck sales were the best category, and that was that. Oh, well, Angela, can you give a specific question? Because all I'm doing is I'm waiting for the ECB meeting to start, which is just in a few minutes. But if you have, let me know, just ask something more specific, right? So I am here to share my knowledge and so you can have a better understanding of FX, right? You're hoping for an opportunity to be taught even more. So what do you want? What do you need? I mean, a special webinar? Do you want a book? Do you want a specific topic? Do you want to be mentored? Do you want, I don't have a DVD to sell you, but Mark says, I read somewhere most Mercedes AMGs are sold. Yeah, probably. I had an AMG 55. That was nice. Yeah, so again, anything you want, just let me know, my friend, and I'm here to help. That's why I am here, in fact. You know what? No, I have not been to Cuba, and it was one of my goals at one time, I think before I got married with kids. But one of the things I would have liked to have done is gone to Cuba to watch a baseball game. Do I expect interest rates tomorrow? Absolutely, yes. In fact, I've been saying that since I think about March or April. My prediction was December. Before that, I didn't think they were going to raise at all this year. Even though everyone on TV and everyone in the market and all the reports and all the newspapers, everybody said it's definitely going to be March, it's definitely going to be June, it's definitely, it's got to be September. The Fed is so negligent, they're hurting the economy, they just have to do it. I'm like, no, they're not. So since about March, I've been saying December. Before March, I didn't even think this year at all. Do you know what changed, right? Do you know what changed my opinion from not this year at all to the December meeting? NFP? No, we've been in a steady trend. Janet Yellen, yeah, you're right. Janet Yellen actually said it. She actually said it. So here's my logic. She said by the end of the year. And in March, I looked at where we were, and I looked at what would possibly happen over the summer, which if you look at historical data, you get an idea of what's likely to happen. And you ask yourself, is that enough? And you got to remember too, early in the year we had China just collapsing, we had the Greek debacle and all this kind of stuff, right? So I looked at them like, it can't be September, that's just too aggressive, and there's no reason to be aggressive. So that means December. Because they can't do it in October, there's no press conference in October. So the only two questions was, is the economy going to be enough in September to jack them up? Or should they just wait to December? So what she said in March was December. And if you had asked me in March, I would have said, you know what? I would wait till 2016. Okay. But anyway, Angela, I'm here just to ask questions. And if you guys need something as a community, feel free to ask me. It's why I'm here. Okay. So I thought today our focus really should be watching the meeting live together. Okay. So that's like about 90 seconds from now. Okay. Yeah, so Lucas, the OPEC is tomorrow. The OPEC meeting's tomorrow. What's wrong with the web link, Kenny? I didn't know there was a link issue. I did unlock it, so that I don't think there's a time expiration at all anymore. Oh, well, send me an email, my friend. Yeah, oh no, I unlocked it 3 weeks ago, maybe 2 weeks ago. Really? You should be able to over the last couple of weeks. If not, if I have to manually kick your membership or something, please let me know. Wayne at FX Bootcamp. Initial jobless claims 269. Right on track. No surprise there. Okay, you gotta send me an email, dude. Wayne at fxbootcamp.com. So look at that. We picked the top, right? I'd rather pick the top than the bottom. I know, old joke, right? Yeah, that strategy stinks. Here we go. There's something wrong with sound. Maybe they're fixing it.
Thank you.
Good night. Thank you. Good night. Ladies and gentlemen, the Vice President and I are very pleased to welcome you to our press conference. We will now report on the outcome of today's meeting of the Governing Council, which was also attended by the Commission Vice President, which was also attended by the Commission Vice President, Mr. Dombrovskis.
I'm running it two places.
Based on our regular economic and monetary analysis, we today conducted a thorough assessment.
All right, found it.
Based on our regular economic and monetary analysis, we today conducted a thorough assessment of the strength and persistence of the factors that are currently slowing the return of inflation to levels below but close to 2%.
Can you guys hear this okay?
And re-examined the degree of monetary accommodation. As a result, the Governing Council took the following decisions in the pursuit of its price stability objective. First, as regards the key ECB interest rates, we decided to lower the interest rate on the deposit facility by 10 basis points to minus 0.30%. The interest rate on the main refinancing operations and the rate on the marginal lending facility will remain unchanged at their current levels of 0.05% and 0.3% respectively. Second, as far as non-standard monetary policy measures, we decided to extend the asset purchase program. The monthly purchases of 60 billion euros under the asset purchase program are now intended to run until the end of March 2017 or beyond if necessary, and in any case until the Governing Council sees a sustained adjustment in the path of inflation consistent with its aim of achieving inflation rates below but close to 2% over the medium term.
Doesn't sound like he's going to add to the amount, though.
We decided to reinvest the principal payments on the securities purchased under the asset purchase program as they mature for as long as necessary.
Who cares?
This will contribute both to favorable liquidity conditions and to an appropriate monetary policy stance. The technical details will be communicated in due time. Fourth, we decided to include in the public sector purchase program euro-denominated marketable debt instruments issued by regional and local governments located in the euro area in the list of assets that are eligible for regular purchases by the respective national central banks.
The market doesn't seem to care.
Fifth, we decided to continue conducting the main refinancing operations and the 3-month longer-term refinancing operations as fixed-rate tender procedures with full allotment for as long as necessary and at least until the end of the last reserve maintenance period of 2017.
We're up 200 pips.
Today's decisions were taken in order to secure a return of inflation rates towards levels that are below but close to 2%, and thereby to anchor medium-term inflation expectations. The latest staff projections incorporate the favorable financial market developments following our last monetary policy meeting. They still indicate continued downside risk to the inflation outlook and slightly weaker inflation dynamics than previously expected. This follows downward revisions in earlier projections exercises. The persistence of low inflation rates reflects sizable economic slack weighing on domestic price pressures and headwinds from the external environment. Our new measures will ensure accommodative financial conditions and further strengthen the substantial ease in impact of the measures taken since June 2014, which have had significant positive effects on financing conditions, on credit, and on the real economy.
So we hit the 200 EMA on the 400, on the 4 hour.
The momentum of the euro area's economic recovery and strengthen its resilience against recent global economic shocks. The Governing Council will closely monitor the evolution in the outlook of price stability and, if warranted, is willing and able to act by using all the instruments available within its mandate in order to maintain an appropriate degree of monetary accommodation. In particular, the Governing Council recalls that the asset purchase program provides sufficient flexibility in terms of adjusting its size, composition, and duration. Let me now explain our assessment in greater detail, starting with the economic analysis.
Lucy, let me explain.
Quarter on quarter in the third quarter of 2015, following a rise of 0.4 in the previous quarter, most likely on account of a continued positive contribution from consumption alongside more muted developments in investment and exports. The most recent survey indicator.
What do you think? Are we going back to 111?
Looking ahead, we expect the economic recovery to proceed. Domestic demand should be further supported by our monetary policy measures and their favorable impact on financial conditions, as well as by the earlier progress made with fiscal consolidation and structural reforms.
Well, Kenny, they're priced in dollars, and the dollar's way down.
Low oil prices should provide support for households' real disposable income and corporate profitability. And therefore, perhaps...
Well, Sembo, it wouldn't be 110. It'd be 110.50 or 111.
Increase in some parts of the euro area reflecting measures in support of refugees. However, the economic recovery in the euro area continues to be dampened by subdued growth prospects in emerging markets and moderate global trade, the necessary balance sheet adjustments in a number of sectors, and by the sluggish pace of implementation of structural reforms. This outlook is broadly reflected in the December 2015 Eurosystem staff macroeconomic projections for the euro area, which foresee annual real GDP increasing by 1.5% in 2015 1.7% in 2016.
So 2016 is the same, increase for 15, increase for 17.
Prospects for real GDP growth are broadly unchanged. The risks to the euro area growth outlook relate in particular to the heightened uncertainties regarding developments in the global economy, as well as to broader geopolitical risks. These risks have the potential to weigh on global growth.
All right, I'm going to stop the recording and upload it to YouTube, but I'll keep the room open and we can continue listening together as a community. Is that cool? Cool.